Cross swap is taking off as anticipated. Textbook Elliott Wave and Fibonacci, where we can measure price action because it's demonstrating the psychology of the mass market, so we can project with high probability what's likely to occur next. So today's going to be a fast update, a quick update with cross swap, but we're using it as a case study of how powerful Elliott Wave and Fibonacci can be to help you minimize your downside, maximize your upside, because we do probabilities, never certainties. If you like today's video, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008. But now we focus on crypto. Let's dive straight in. So this was the video yesterday. Was it yesterday? 29th, right? And we're saying, look, this down here, if I pull up my laser, this down here looks like a wave 2 low, and we should anticipate this impulsive movement to the upside, which is a wave 3. But a wave 3 typically breaks down into a 1, 2, 3, 4, 5 of a wave 3. That's what we want to look at today, so you can anticipate. Also, we want to look at the staking rewards, how we can leverage that information with the staking to minimize the downside. It's always about protecting, that rule number 1 of Warren Buffett, never lose money. So what happened yesterday? Just textbook stuff, man. It's just textbook. This is a daily chart. We're using DEX tools. Nice move up. We had this ABC, like we said, ABC down here. Textbook, time, price, momentum. The momentum, we had this bullish reversal down here. Hopefully you can see that. This bullish reversal on the momentum. We had that over here. That indicates that the movement of the market should be sideways to up. What's happened now, though? Yeah, because we've got to remember, this is pure technical trading that we're looking at here. But fundamentally, we do also know that CrossSwap is looking to release its DEX, its version 1 DEX, this quarter, possibly in November. So we're moving into November now. But we've broken this all-time previous high. We've closed above it yesterday, and now we're hovering about this point here. So we want to look at what is this price structure, this psychology, right? And remember, the great thing with CrossSwap is the more people that are buying and selling, this over here, if I can just pull up my laser again, because we want to leverage this information, leverage what they've offered us. Here, this APY, it's been as high as 670%, as low as 54%. It's averaging, I think, around 300-400%, which is very lucrative because it's paid out daily. It's paid out daily, so this can minimize your downside. So I wouldn't be surprised if tomorrow's APY is 300-500%, because a lot of buying and selling happening, and the tokenomics is, I think it is 5% tax on all sales. You have to create a 5-6% slippage, and that majority of that goes back to stakers. It's good news for stakers, right? People that believe in the project. So what we're going to look at now and finish on this, I want to keep it sharp because I've got a live webinar in 10 minutes. 10 minutes. It was literally 5 minutes ago. I was like, shoot, I haven't recorded my video of the day. What should I cover? I thought, actually, let's just keep a close eye on CrossSwap. So what I want to look at here is this part of the market on the right-hand side, right? Forget everything else. Well, we're not going to forget everything else. We're going to do two things. We need to look at a macro picture. It's very important. So important, guys, because you'll get caught out otherwise. Macro picture is wave 1, wave 2, wave 3, right? Wave 3, that's what we're looking for. But then wave 3 tends to break down into microwaves. So what we're looking at here, if I just zoom in, using DEX tools here, let me just zoom in like this. Right, what does this structure look like to you? It doesn't mean it's guaranteed, but this structure here on a micro level, and I wanted to show it to you like this, just textbook. Look at this, wave 1, A, B, C of a wave 2, a very impulsive wave 3, looks like some type of wave 4 forming, and then we should find another leg up like this. That's just textbook. So when we're looking at wave 3, it's typically 1.618, right? And it's in that zone, right? It's in that zone. So where is a typical wave 4? Wave 4 is typically, we measure wave 3. I covered this in my free Elliott Wave and Fibonacci masterclass. It's in the link below. If you take my course, I've got a massive discount at the moment. You'll get invited to my private Telegram group. They're the guys that are getting the workshop. That's starting in 10 minutes. Jeez, I need to wrap up. Right, we're keeping it short, sharp, and sweet today. Right, this is a typical wave 4 zone. Wave 4s should not trade into the range of wave 1. Right, and if it unfolds this way, remember, we do probabilities, never certainties. Right, this will become a wave 1. Right, 1, 2, 3, 4, 5 of wave 1. What do we anticipate next? An A, B, C correction. And then what do we anticipate next? There's a wave 3 of a wave 3. A wave 3 of a wave 3, my friends, is the most impulsive, aggressive wave especially in financial markets. It tends to be the case in crypto, but in crypto, wave 5s tend to be quite aggressive as well because of panic buying. But this wave 3 of wave 3 probably be like this. We'll probably get some type of correction for a bigger degree wave 4, and then a wave 5 of a wave 3. And what we're anticipating, I'm going to finish on this because I need to make sure you get this content today. Otherwise, I'll be in trouble. All right. Wave 3 is what we're looking at here. That's what we're looking at. Doesn't mean it's going to unfold that way. Nope. Doesn't mean that. But we want to look at the APY rewards. Stake whatever amount of your tokens. Take leverage of those rewards. They're very lucrative and they get paid out daily. Be mindful of the locking period, the 7-day locking period. And when you unstake, I believe your rewards stop for those 7 days. Some people can call out with that. But otherwise, we got a nice 1, 2, 3, 4, 5 structure coming up. Right now, don't be too surprised if we get another punch up, a bit of a correction, and then next week, boom, I think. And that might even line up when they're launching version 1 of the Binance Smart Chain DEX, which is going to have an Ethereum bridge according to their roadmap. So cross-swaps looking good. But use this as a case study. This here, it applies with many, many markets, many times, and there's identifiable patterns that we want to use. And it's the psychology of buying and selling. So if you like today's video, like, subscribe, hit the bell notification. Take my free Elliott Wave and Fibonacci masterclass. It's in the link below. Create it for you. Try to simplify these things. Let's finish on. Let's go. I'm racing the clock right now. I go, geez, I need to jump on this webinar. All right, here we go. No, let's go for a different one. All right, hold on. It has been my observation that most people get ahead during the time that others waste. Henry Ford, keep practicing, keep learning. Take my free Elliott Wave Fibonacci masterclass. I've created it for you. I've simplified it. Spent hundreds of hours making complex things very simple because Leonardo da Vinci said it best. The ultimate sophistication is simplicity itself. Have a great day. I will see you soon.